Welcome to Trading Lounge and the commodities for Monday, January the 17th. And just before we start, the little survey that we put out last week to try to figure out what folks were using and what we should adjust and add to and reduce and make a better service overall, and just sharing with you how members look at Trading Lounge and use, and this means that we can adjust what we're doing in terms of our service here. So you can see that the Forex is not being used very much, so we're going to put the US dollar index into the commodities. We're going to put the Australian dollar into the Australian video, and the Euro US dollar we're going to put into the European video. So at the end of this month, we won't be having charts for Forex. It's something that we're going to sort of diminish, and we want to spend more time in the crypto space instead of the Forex. So in one way or another, we need to improve our service on the crypto. So I'll be giving that some thought and speaking with Kitty upon about that as well, see what he would like to do and can do and so on. Obviously the indices are the big thing here, so we do a pretty good job on the indices anyway, but the indice charts will also be going as well. The commodities, I didn't expect them to be, coming second in the situation. So I'll be doing a better job on the commodities and not missing the videos. I mean, normally I make 6 videos a day. Sometimes it can come a little bit overwhelming and it's a long time to sit at the computer and all the rest of it. So I normally don't, maybe I end up doing the commodities twice or 3 times a week, but with this interest in here, I'll make a special effort and make better videos and make sure that they go out there on time. We had a lot of written response for the stock trades, so Alessio is going to create actual stock trades out of the stock list. Our stock list for what Alessio does is about 120, 130 stocks. Those stocks are actually from Cathy Wood's ETFs. So we've taken all the stocks out of her ETFs and we're doing technical analysis on those because she's already done the fundamental analysis on those innovative, disruptive stocks that cover AI, robotics, nanotechnology, and so on, 3D printing and so on and so on. So, she's put a lot of work into all of that, and God bless her cotton socks. And I think doing the technical analysis on those particular stocks is a fantastic way forward. So Alessio will be doing that. So we'll be getting a little stock portfolio sort of happening on the website soon. And also too, the stocks are very difficult to find on our website. So we're looking at either building a new website or upgrading the current one. We'll probably see if we can do anyway. I've put the feelers out to see what we can do and what we can't do, so we're working on that. So this year, last year we improved our service by adding Alessio on the stocks, which is fantastic, and Kitty Pon on the crypto, which is also fantastic as well. So we'll be looking to make improvements in technology wise for our website and improve our service, and I'll also look for another analyst that and good Elliott Wave analyst that is in the US in that time zone. Kitty Pon's in Thailand, Alessio's in Italy, and I'm in Australia. So to get somebody further out on that US front there that can do certain updates at certain times would be handy. Alrighty, just want to thank everybody for giving us that feedback, so we've got a little bit of direction for all of that. Okay, we're going to be looking at the US dollar. We're going to look at iron ore, gold, silver, copper, crude, nickel, and natural gas. So with the US dollar index here, it has dropped down. As a wave 4, the 38.2% retracement level was at the 95 area here. The opposite to all of this too, if you've been following our Euro video, we've been looking for wave 4 to pull back up. Well, probably where those open and closes were up, just up in here. So I'm just going to clean that up. We don't need that. We're expecting I just don't need that there as well. I'm not going to go to the intraday for that, but we're expecting this move up. So we've got this same triangle pattern of the inverse happening in the euro here. It's pulled back up to its 38.2%. So we'll expect this to work itself lower now in that regard. So we can expect this particular pattern here, if we look at this in reverse on the US dollar index here. We could count this in different ways here. I've got 5 waves from this point. It's possible that it could make one more low here. I'm not quite sure. It's looking quite impulsive to the upside here. Yeah, I mean, I got the count right on the euro, so I just reflected that back over here, and fingers crossed analysis, and we'll see how we go with that. But yeah, look, it's heading in the right space. So yeah, we'll see. We'll see how that goes. Yeah. A little push up through there. Obviously, that's going to push it, put a little bit of short-term pressure on the commodities. The commodities are sort of looking strong, but in the short term, the intraday, they can be pushed down, and I'm kind of expecting them to do that. So, first one we can look at will be iron ore, and we're expecting that to pull back as well at this point in time. So, if you've been following the iron ore, I missed out the last video on the Friday. Had my booster shot, which knocked my socks off for a good day or so. So I couldn't do the videos. But yeah, the couple of takeaway points here is that I should just label these so we can see them. So little wave 1 here and 2 here, and up for wave 3 here. I'll need to sort of double check this as well. And then we're looking the last time, all last week and yada, 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 we're speaking about this move up here is 1 and 2 and 3 and 4, and then looking for the top to come in. So that's come in nicely here for either wave 1 or wave 5. It kind of doesn't matter at this point because we've got an impulse wave in the opposite direction of the trend. That means we'll have an ABC correction and then another move up. So while while the US dollar index is pushing up, then we're likely to see this continue to move down. Now, the only mistake that I could make is this move up here could just be a wave 1 and coming back for the box for wave 2 and then moving up further. Now, at the 61.8%, the first move down here always comes into that anyway, so we're going to see that come down into here and then bounce back here as well. So then I'd expect it to come down for wave 3, 4 and 5, so to speak, into that area there. Let me clean the rest of the mess up there. And then we would have an ABC pattern coming back up, hitting supply and down, and then would move up, something like that anyway. We'll trace that out a little bit, but main point, US dollar index up, this can move down. It's also, as I just mentioned, it's possible that we could just continue to cruise up on this, so we'll just need to keep an eye on that. But they're all the pathways for this. We don't really trade this here as such, the iron ore, but we trade Australian iron ore stocks, so that's important to the Aussie mob. Yeah, anyway, that's where we are for iron ore. And the next one we're going to have a look at is US spot gold. So on the 2-day chart here, as you may know, we're looking for wave 3 over here with the triangle A, B, C, D and E over here. And we've got from D to E, we're looking for an ABC. We've got the A wave, we're looking up for the B wave. We can have one more little high here before we go down further down through here. From B to C will also be in 5 waves, so that will be pretty easy to track. So as it moves down, we'll be able to pin the price up. We'll be able to get very, very close to the low in that case. So let's pick it up. I can't remember what I've done here now. Anyway, we'll just let's have a look at the 4-hour chart. We'll just cruise in normally. If I haven't done all the work, that's okay. Okay, so from D over here to A here, then we're looking at this here as an A wave, a B wave, and a C wave for the B wave. So for the B wave, we're looking for a 3-wave move. And I was looking at this coming up through here. I thought there might be one more little move in here before we get this 5-wave structure to the downside down here yonder. I could be wrong, and we could come straight down, but I just want to talk about that a little bit more. Maybe the hourly chart, yeah, that will do the trick. So with the hourly chart here, going from wave B here to wave C here, I was thinking 1, 2, 3, 4, 5 for 1 and 2 here, then 1 and 2 and 3 and 4 and 5 for the third wave, an A wave, a B wave and a C wave here. For the C wave we want 5 waves. We've got 1 and 2 and 3 and 4 and 5. So this little horizontal line here is the 38.2% retracement level. So we've got a little bit of space in that to come down. So if you can work out 5 little waves here, I can see we've got 1 and 2 in here, 1 and 2 and third. So got a little bit more to come down. And then we can expect a little push up in here and then a fold at that point. Obviously, if I've got it wrong, we're going to keep on cascading down. I would probably wrong if the 1810 became the retested resistance. Okay, so if I'm wrong, then and this becomes the resistance here, then we're started at that point. But this, you know, this move up here, that would have to be the 5th wave, and it really looks like it's in 3 waves there. Anyway, that's the general picture on that. So while this, you know, has got a little further to go here, and then 5 waves down here, I mean, how will that look for silver? So let's have a look at silver. So I'm thinking that the bigger picture, I've got the low in here already. Look, that may be the case and it may not. So what I was going to do, and last time I spoke as well, we were looking at this being an A wave, a B wave and a C wave up here. So another little move up here. And it kind of, you know, in a way, let's just clear this up and this up. Let's say like gold, that there is another little move up here. Okay, so that moves up there. And then we start moving down from that point, okay? Now, if I'm wrong, then, and the market's going to move up, we have to wait for that high to come in to go long. Of course, we can take the second high as we normally do, but this move here, just in case it's an A and a B and a C wave to here, and then going to be moving down, one more move down here to make another low bounce into this area here. Yeah, that will keep us safe, but also keep us, you know, we won't miss anything if it goes to the upside. But we do have to wait for this little move to finish here. It's as simple as that. Looks like it wants to kind of turn down shortly, but we'll see. Yeah, otherwise we've got to follow gold down and we'll get 5 more waves coming into this low here. So, yeah, that's it. That's the best way to sort the oats from the chaff, so to speak. Alrighty, crude oil. So we may need to take a different view on this because it's moved a bit higher. So I've had it like this as wave 5 here of 1, and we're going back for wave 2 over here. And this is all from this move down through here of 1 and 2 and 3 and 4 here. So it has reached quite high for the B wave, which is not out of things. So what I did, I went back over and had a look at all of this here to see if we could change it. So as I've got the A, B and C here, that's all okay-ish, and we can continue to run with that, but we may end up with a situation where we need to change things. So changing it would be that, would look like this. And it would be like this. Now I went back over all of this and all of this on the tick chart and all of this here. So I can get a B wave out of this, and we're going to have a look at that. So we've got an A wave, a B wave and a C wave here for wave 4, and we can look for wave 5 to move up here. So that means that we'll be looking for 5 waves up here. Wave 3 normally comes in around the top here, and then we've got wave 5, and then we're going to have a bit of a sharp ABC pattern come into play before we go into another big bull market up there. But I also must point out too that this wave 1 here, we'll need to be a little bit careful. We can also view that as a wave A at this point as well. And then this is a wave B and then a wave C up here. that kind of goes back to a bigger picture for the, I can just sort of, maybe we can just have a quick look at that reasoning as well while we're here before we have a little look at the other one. So just, I'll just go into a 2-month chart, see how much data we got here. Yeah, so basically, the reasoning for this being an A wave here would be an A wave up here, coming into this space, and then a B wave here, and then a C wave coming up here for a bigger B wave, and then 5 waves down here. It's a possibility that we need to keep in mind, and this would be pretty much, I'll just keep it simple, as a cycle degree, maybe a super cycle degree, and then wave C here. So I'm just painting the picture. I don't know if that's going to be the case. If it's, and then we go up and make new highs above here and have a, much bigger bull run up, up through here. But of course we can look at all of this as wave 1 and 2 here, and then 3 and 4 and 5. I don't really see a problem with that as well, because we'll be moving into the commodity cycle. This will be in line with copper and other markets in that case. So, but yeah, I think we just need to address that situation. So going back to, where were we on the daily chart here? So I don't know if this is the case, but this is what we'll also just need to take on board with an A and a B and a C here, and then going up for wave 5 here and having 1 here and coming back for 2. So we'll know in due course. But yeah, like I said, I can get 5 waves out of this, and I can get an A and a B and a C here for this, and obviously the A wave is here for that. So I think, I don't know if we're on the hourly chart or the tick chart. I'll just check the hourly chart first. No, nothing there. So we're just going to go to the 100 ticks, and we're going to bring in some more data, even more. Okay, so this is a tick chart, 100 ticks. So I went over all of this and I looked at the A wave speaks for itself. So the B wave here, I've got the A, the B here, then 1 and 2, 1, 2, 3, 4, 5 for the third wave, fourth wave, 1, 2, 3, well, 3, 4, 5 here. So I think that fits really quite nicely as a B wave. The C wave down here is wave 1 here with an A wave here, an A, B, C for the B wave, and 5 waves up for the C wave here. Then 1 and 2 and 3 and 4 and 5 for the third wave, fourth wave and fifth wave to make the wave 4 there. So I'm kind of like, I'm cool with that. So that brings us back over to this leg here. And so I've looked at I've pulled all this apart, but I've cleaned all I'd had everything labelled, but I can't keep too many labels on the chart. But in a nutshell, I can count 5 waves from here to here, and then an A wave, a B wave, and a C wave. Don't need these guys here either now. Where did that one go? So we don't need those. So wave 1 here and 2 here, and then I take the Fibonacci, take the length of wave 1 here, and then take that length here and apply it to the bottom of wave 2 here. My target, my 1618 target for wave 3 is in that space there. So around the 8,300, 400 sort of area there. Pay too much attention to it, but it just gives you a bit of I needed to get a bit of a ballpark figure for that. But normally as well, it can come, normally wave 3 comes in around the old high, and that way wave 4, nice complicated wave 4 at the top, So moving up here from wave 2 here up to wave 3 here, I've got pulled all this apart. So I've got wave 1 here and 2 here. And then from wave 2, I've got green wave 1 and green wave 2, green wave 3, 4 and 5 here for that. So this is kind of where we are at the moment for this. Let me just get in. Crude's always been a very difficult market to trade and count. It has its moments. So, yeah, I don't need any of this now. So looking at wave 3, 4 here, and then 1 and 2 here. I've still got to finish this off here. I haven't really done that, but I've got 1 and 2 I wonder if I can use all of just that. It's a bit small for wave 3 there, I think. Let me just look at the size of that for a second. It looks a bit shortish, but never near, way short. So that will be part of something else. So I've got to figure that. We're still going to the upside though. That's the point here. We've got to get to this wave 3, then this wave 4 here, and then this wave 3. So we've got 3, 4, 5 for 3 and 4, and then 5 up here to have that top. And when we get to that top there, that will be wave 5 of wave A or 1 at that point. So I'm going to put wave 1 there, and we're going to put wave A there as well. Give them equal weighting, so we'll always be aware of that situation. But that's where we're sort of climbing to. So we're going to be continuing to climb higher here. So in the next video, I'll get a better grip on how all this is playing out here. The commodity video is going to be quite long, so I just got to kind of continue with things. But this is still going up, so if you're long, stay there, and probably upside targets around the 9,000 at the end. But obviously this wave 4 we need to navigate, and this wave 4 here, so they're game changers for short-term traders, unless you're going into the ETF market, which we'll also be having a look at as well along the way now. So that's crude. We're going to have a look at copper. For copper, this is the ETF we're looking at. So in copper here, we were thinking for this one, we've got the A wave, the B wave, the C wave, and last time we spoke, we're looking for another move up. It gapped higher and now it's trading lower. So perhaps we're going to finish this E wave off now for that. So the E wave will be in 3 waves. It'll be a little bit smaller and all those sorts of things, but yeah, this will give us a buying opportunity coming into play here. So yeah, anyway, that's that. We want to have a look at high grade copper, of course. So nickel, high grade copper. So once again here, like crude oil, see, I can count 5 waves in this move here. That's why I've got wave 1 here, but this is more like wave 4 type of personality here, and another move up here would put us in line with crude oil as well. I could put crude oil as intermediate wave 1 and wave 2 here. So this is a picture of really the general markets in a way. So let's so just on the weekly chart here, just wanted to point out that we can look at this as wave 1 and 2 here, then 1, 2, 3, 4, 5 for the 3rd, 4th and 5th here. So that all plays out in my tiny little brain. That plays out quite nicely. But to have a wave 2, I would just assume that would have a more simple correction. We're not getting that. So we'll see how this sort of plays out. We've looked at this once before. So this would be wave B here and wave C here for wave 2, with wave 1 here, an A and a B and a C for wave 2. Doesn't really count very nicely for wave 2. And then we'll be looking for a deeper move to come into this here for wave 3, 4 and 5. Or we could end up with some sort of, WXY, even bringing that further over here. I'm going to go into my daily chart to look at this. We've been looking at it like as a 3-4 move here. I can still put this wave 5 up here as wave 1. It's not a biggie. Let's move that out the way. It's just so typical of a wave 4 though. This is my issue with all of this. But anyway, we'll get there. So last time we spoke, we were looking up at this as the A wave and then a B wave back, and we're looking for a C wave to move up into the 61.8%. It popped up a little bit higher, but that's totally cool. So we can put that wave D there, and we can remove that. So yeah, look, it's still going to be, rough as sandpaper coming down. We still need this ABC pattern to come down here to finish off this wave 4, and we need to be mindful it doesn't come sort of lower as well. So we can look to trade long in this leg here as soon as we get our first impulse wave here. But this little ABC here, that took from 15th of December to, let's say, a month, So inside a month, it's not 30 days in trading, it's 20 days, 5 days in the week. So we can expect, it's the 15th today, 17th today. So we can look at this time in February for this low, roughly speaking. So mid-February will be in this space here. I don't need to go to the intraday for this one, but that's sort of where we are, and everything's sort of bobbing along nicely in this awkward corrective pattern at that point. So nickel is next, then natural gas. So with nickel. So this is the weekly picture here. I might need to make a change. I did have a quick review of this here, and it might be that this wave one here is actually sitting on top of that. This is intermediate wave one. It may be sitting on top of minor wave one here. Not that it's a big issue at this point, but I just wanted to go back over this because it was a little bit dodgy, and I did go back over it, and I came to the conclusion that this is intermediate wave one sitting here with intermediate wave two sitting here for this. I could probably redress all of this and drop it down a degree of structure as well, really probably the right thing to do. So I'll give that some consideration over the weeks ahead. But it still doesn't really bother us from what we're doing here at the moment. Now, fundamentally, I don't know much about nickel. I mean, obviously I know it's in stainless steel, it's used in batteries. Indonesia supplies China with 84% of nickel. I think it was earlier this year or late last year. Indonesia is facing up to China. Probably under the influence of the US, of course. Indonesia stopped exporting coal to China, and a couple of weeks ago, I don't know the exact day and news, and it might have been part of the spike here, I don't know, but because China buys 84% of its nickel from Indonesia has banned all exports of nickel to China. So that's going to do whatever it's going to do. Anyway, that's the story fitting the pattern, so that's all good. Is destiny set? Is it preordained? Is it accurate? Or is it fate? I don't know. But when you've been working with Elliott for a while, you do wonder if destiny is preordained, maybe with a mix of some other stuff in there. I don't know. I didn't even know what we're doing here on planet Earth anyway, really. Everybody's still scratching their navels, I don't know if the lights go out in the end or there is one little light, and that's who we are as a soul. And as a soul, I don't know, what's a soul anyway? A little bit of energy, I guess. The mind, the memory, and the intellect are the functions of the soul, as the Hindus would say. And the soul is not part of the body. You can cut your arms and legs off and take this part out and that part off, and you're still who you are. So anyway, that's another philosophical story, all very fascinating and interesting, but today we're focused on making money, so let's go in and check this out. It's kind of interesting, this is the major level here, and it's hit the top of group 1 basically. So what I can say here is that with the trading levels, if the market finds support on top of group 1, which is the 23, so simple 1, 2, 3, 5, and the 5's the medium level. But if we get support on top of this level, number 3 here, 23, then then we're going to be leaving the closest largest number, in this case major trading level 2 here. So if we get a tested support on top of 23, where that's confirming that we're leaving this number at this point. But this could also just be the first high above the level, and while the US dollar index is pushing higher, we could come down here. But that's why I went and checked on this count here to see if that was the case, but I could only get this wave 1 to sit here with the wave 2 here. We don't need this anymore in here. So that's just noise that we don't need. Let's go straight to the hourly chart where we've been working. Okay, so it's possible that that this here is actually intermediate wave 2 at this point. So anyway, I'll keep doing some work on that. I just got to do bit by bit. There's a fair bit to do. So yeah, we looked at 1 and 2 here, and then 1, 2, 3, 4, and 5 for 3 and 4 and 5. We're looking at this as wave 1 here. It may be this is wave 1. It might be minor wave 1, the next higher degree in the structure. So, but that also doesn't matter for the time being. And then we started to look at this to the upside here for this. So we can see. I think I might need to go to the tick chart here actually. Let's go. Okay, yeah, we did do some work. I'll just work in this space because I thought we'd put some green lines in for trading and so on, or moving in. So we just went over this as wave 1 and 2 here, and 3, 4, 5. So I don't need to go over that. So working from the low here, we've got 1, 2, 3, 4, 5 for 1 and 2. And now we need to work to the upside. We had these wanted to buy before the level and above the level. We can talk about that in a moment. I must have already had this in as 1 and 2 here. So 1, 2, 3, 4, 5 here for 3. So we can pop that there, and that there. That all makes sense. We can look at that as wave 3. So we've got wave 1 here and 2 here and wave 3 here. We need that wave 3 to be longer than that. Is that the case? It doesn't look like it, does it? So just putting that there just for a moment and using that as a bit of a yardstick to there. Sometimes it looks a little bit illusionary, so yeah, well, it is longer, roughly speaking, than a little yardstick. So that's okay. So then the question is, do we put wave 4 here? Just working on the hop. We'll just don't have a wave 5 yet, so let's look at that. It would sort of make sense to put wave 5 there, but I just don't think that's the case. I think we don't need these little guys here. We're going to go in and check on this now. We've got to resolve this problem. So can we put this wave 4 over here? What does all this look like? Can we put the B wave here and put wave 5 over there somewhere? Can we put that? That's corrective, whichever way we look at that. Can we put wave C there? It does look like 5 waves down, but we can just check on that. So 1 and 2 here, and 1 and 2. Oh, I'll have to go. Let's go somewhere where we can see it. Okay. Now you're entering the workroom now. So we've got 1, 2, 3, 4, 5 for 1 and 2, 1 and 2, 1, 3 here. 1, 2, 3, 4, 5 here. 1, 2, 3, 4, 5. So that's 5 waves at this point. So sorry, that's 1 and 2 and 3 and 4 here, and then down for 5. So that's 5 waves. So while we're here, this move up through here, just do we need to look at that as 1 and 2 and 3 and some wave 4 here and 5, 1 and 2, 1 and 2, 3, that's not fitting very well, so we'll have to count all that as 5 waves. So that's 1 and 2 and 1 and 2 and, or 1 and 2, or no, I'll just leave 2 there for a moment. That's a nice third of third, and that's okay, it's third, fourth, fifth, so that's all 5 waves there. So what have we got over here then? That would be 1 and 2, 1, 2, 3, 4, 5, 3 and 4 and 5, so 1 and 2, and all that's 5 waves, that's 5 waves, that's 5 waves. What have we got in here? That's 1, 4, 5. So it really looks like an ABC pattern here. So an A wave, a B wave, and a C wave. So I think that we've got here we've got all of this as an A wave, a B wave, and a C wave. So that means we need to see this. The way we could look at this now is we don't want to see a drop below 61.8%, so that will be the support there for that. I suppose we could let it go a little bit lower, but we don't want that low taken out. So if I was going to go long here, we could go long above. Well, we start bringing in, actually I'll just, don't need to be here in the 5 tick, we're just going to go back to 100 ticks and do a bit of labeling there. We don't need that many out. It's 5 enough. 5 is even plenty. So that was correct. We can look at this little move up here. You can do your own homework on this, and if I'm wrong, please let me know. I'm open to constructive criticism, just not personal. And if you're going to make statements and things, I mean, just don't make a statement. I mean, lead by example, so show rather than tell. That's constructive. So it's possible that we've got a little wave 1 and 2 up here, but we can't let the market go. I mean, it's not up to me to let it go anywhere, but this could be 1 and 2 of the next move up at this point with this here. If that's not the case, then we'll need to call wave 5 in. I thought I had it over there. So we could put wave 5 here just to remind us as an alternative, because if that is the case, then what will happen here, that low will be breached, and then we have to look for some sort of A, B, and C coming down here further. But I don't really want to see it come down any further because we're working this to the upside here. So we've got blue wave 1 and blue wave 2 here, so this will make blue wave 3 up here to that point. And yeah, so let's just see if we get that. If we get that, we're looking for 5 waves up here, and then we're going to get wave 4 to come into play here, coming back to this wave 4, and then we'll see wave 5 move up. This 25 up here is important. That's going to be a medium level, so I'll just copy that and put that there, and that will put that grey. That's halfway between 20,000 and 30,000. Let's call that a medium level. So we'll be looking from 20 here. We've got 1, 2, and 3 that make up minor group 1. If we get a tested support on here, then we're leaving this number. I mean, it looks like a long way from here, but on the daily it does not much. But that 3 is a fantastic number for understanding when the market's leaving the closest largest number and then being pulled up to the second strongest number, 5 here. And then once that happens, then we can look up to 30 at that point. So it's basically just climbing, and yeah, so we don't need some of these little dudes in here anymore. So you can put the levels in here between all of these as well, you know, between 21 and 22 here. You'll have 1, 2, 3, 5, and 8, and then you got group 2, so you can do all that sort of stuff. It's good when you're building, you know, building to the upside. We don't need that. And that's that on that. So that's it's all cool. Let's see how that plays out there. So obviously, you know, this is sort of futures market stuff. It's better if you get to, you know, the ETF or nickel stocks and you know, do this without leverage and play for the longer term, you know. Let's go. Okay, we're going to look at, I'll just take this back to 200 and weekly here. So yeah, I'll do a bit more work on this and stands, but yeah, we're looking for that move up to the 25 there area. Okay, natural gas. So we're looking at it as wave 1 up there and wave 2 to come back, just being positive about it. We're looking for this strong move down here, the third of the third. I mean, you know, I'm just thinking, I still haven't looked in here yet. But I was considering being a wave 4 here. It could be this wave 4. It did spike up there and look quite positive. Let's see now if a low is going to be in place here, because it looks kind of lowish, but yeah, I mean wave 3 lows and so on. If it drops below the level and finds it as resistance, this 4 here, then we know that we've still got work to do down here. If it stays above the level and continues to move up, then we've got a low in place. So that 4, no matter what I think and indicators and all those sort of things, that's pretty much the line in the sand. So as support and resistance there for that. So I'm just going to put this wave 4 here. It did spike a little bit higher, the horizontal line we were looking at it. But it all happened. It didn't happen over days. It just happened in one in one session. That spike up. So pretty much a news event. So yeah, I'm not big on spikes. So we'll just take that with a pinch of salt, and we'll just give it a little bit of time to see how it plays out with all of this, because we're kind of looking at it. I could look at it in a couple of different ways. It doesn't really matter. It would only be confusing myself, and if I've confused myself, then I've confused you. So let's just give it a little bit of time here, and let's just see what comes from this here. Like I said, the 4 will be the line in the sand as support or resistance. And yeah, let's just be a little bit patient here. I suppose one of the things that we could look at, let me just get a grip on this here for a moment. I mean, if it was going to drop lower, because I was thinking we could use the top of group 1 here, which would be the 4,300, but then I needed to check that if this could be wave 1 down to the downside, then it could come back to the 380, the 61.8%, and then go down again as well. So it might not be quite helpful. What we'll need to do is look at the actual structure on the tick chart in due course to see what that is. Well, we can go to the tick chart and just check on that to see what it looks like, that move down. Yeah, it looks like 5 waves, sort of 1 and 2 and 3 and 4 and 5 here. So we'll just give it a little bit of time, because normally if it found support back on the 300 here, then you know, as a trader I would go long from that, because I just use the levels. You know, I use Elliott Wave for direction, the trading levels for trade setups, and the volume to confirm the price action or the trend. So they're really the 3 things that I use. So this move up here could be corrective or impulsive. I don't know yet. So I can't send you long here. So we've got to kind of understand if this is going to be wave 1 here and wave 2 coming back to this point. That's what we need to understand. So we'll start building a case for that. Yeah, I need to recount this here. This will be the, just to give you a head start, this will be the third wave here, 1, 2, 3, 4, 5. So that would be the center of everything. So then that could be wave 1 and 2, so, and 3 and 4 and 5 into here somewhere. So it's probably, this is probably all of the third wave into here, something like this. But that doesn't really resolve some of the stuff in here. Anyway, that needs work. Anyway, we'll just wait, just be patient. We need to be very clear before we go long on these things. Alrighty, I'm just going to leave it all at that. Yeah, alrighty, see you in the next video tomorrow. Cheers.